My name is Andrew Stotts, and I want to welcome you to this Valuation Masterclass Bootcamp live presentation. The company is FASTENAL, and our student who's presenting is Hassan. And this gives you a picture of what we do in the Valuation Masterclass Bootcamp. This live presentation is an example of 6 weeks of work to go from scratch, from zero, knowing nothing about the company FASTENAL, to a complete professional report. If you've got any questions as we go through the presentation, feel free to put them in the chat, and then we'll be able to ask Hassan those questions. So let's bring him into the group. Hassan, are you ready to rock?
I'm ready.
How many hours do you think you've put into preparing for this?
At least a whole week worth of hours.
All right. You got to get your screen so it shows in presentation mode. I don't know why I don't
Sure,
see that.
sure. I'll just.
Okay.
Is it visible?
Yep, that looks good. We see it.
Okay.
So in just a minute, I'm going to leave the scene, and then you're going to take over. And you've got about 12 to 15 minutes, and then we'll
Sure.
come in with Q&A. As I said to the listeners out and viewers out there, if you have questions as he goes through this, feel free to ask those questions by typing them in the chat. So I'm going to take myself out right now, and then you can start right now.
Embedded growth and scalable earnings. The future of FASTENAL has never looked brighter. Hello, my name is Hassan Bersalan, and I initiate coverage on FAST with a buy recommendation based on a target price of $52, implying an upside of 12%. This target price is derived from a DCF-based valuation using a weighted average cost of capital of 6.8% and a terminal growth rate of 3%. Before diving into my main core investment thesis, let me discuss the background of FASTENAL. It is a US-based industrial distributor with a market cap of $54 billion. FASTENAL operates globally through 1,595 public branches across 25 countries. It has major investments in AI power sourcing, CRM, e-commerce, and FastGrid. My main story is that FASTENAL is going from a distributor to a future embedded supply chain partner. Multi-channel customer embedment drives wallet share. FASTENAL's digital footprint, comprising of e-business and FMI tools, reached 61.4% of 2025 sales, up from 60.4% in 2024. 95% of revenue is generated from multi-channel customers, which creates greater customer embedment and therefore greater wallet share. Although in fourth quarter of 2025, 2,657 FASTENAL sites generated annual sales of 1.6 million per site. While these sites have grown 14% year over year, FASTENAL's total customer count has fell 8%. This shows a deliberate shift towards higher value and deeply embedded accounts. Therefore, I forecast revenue growth of 9.5% in 2026, up to 12% by 2030. Secondly, AI industrialization can make FASTENAL the supply chain backbone behind data centers. AI investment is creating a new industrial build-out across multiple avenues, and FASTENAL is already well positioned to participate because it already promotes dedicated data center supply chain solutions as well as modular power solutions. It is also investing heavily in AI power sourcing, digital inventory tools, FastGrid, and Industry 4.0 capabilities to make its supply chain more resilient. FASTENAL does not separately disclose data center revenue or pipeline, so I treat this exposure as more of an incremental upside rather than a standalone driver of my revenue forecast. Thirdly, embedded growth is becoming scalable earnings growth. In 2025, FASTENAL generated 1.6 billion of free cash flow, which is equal to 84.6% of net income. The annual report of FASTENAL expects capex to rise to around 330 million approximately in 2026. FASTENAL's large embedded accounts reduce gross margins by 110 basis points. However, automation and sales productivity lower SG&A, which is sales, general and administrative expenses, by 580 basis points, expanding EBIT margins by 470 basis points. Inventory conversion falls, supporting free cash flow to firm growth from $1.23 billion in 2025 up to $2.18 billion by 2030. When you talk about the industry that FASTENAL operates in, it is the industrial sector classified by the JICS system, particularly industrial distribution. The whole industry in general is the critical backbone of global manufacturing and construction. This industry is expected to grow by from 9 trillion in 2026 up to $12 trillion in 2031. The main drivers being automation, infrastructure investment, recurring maintenance demand, and digital procurement. FASTENAL is one of the industry's leading distributors, and it benefits from increasing adoption from its FASTENAL managed inventory FMI solutions. Demand volatility, weak inflation, tariffs, transport costs, and price competition are key risks that this industry faces. If we look at the quarterly results of FASTENAL, we can see that in the first quarter of 2026, revenue rose 12.4% year over year. The main drivers of it being share gains, stronger contract wins, and improving industrial conditions. Gross margin, on the other hand, declined 50 basis points to 44.6%, as customer mix has shifted, which I have previously covered in my story. SG&A leverage was able to lift EBIT margin 20 basis points to 20.3%. This performance in the past quarter also supports my future forecast for FASTENAL. In the consensus estimates, we can see that out of 18 analysts, 44% recommend a hold for FASTENAL, 5.6 make it a sell or a strong sell, while 50% rate it a buy or a strong buy. This suggests that there's a broadly neutral to a slightly positive view on FAST shares. The mean target price is 46.78, which is only slightly above the current price of 46.5. If we look at the revenue breakdown of FASTENAL, there is a positive revenue outlook, especially for the future. FASTENAL earned $8.2 billion in net sales in 2025, up 8.7% of the past year. And this growth was supported by greater adoption of FASTENAL FMI tools, including FastVend, FastBin, and FastStock. When you look at the geographical area, the United States makes up 83% of total FASTENAL sales. Canada and Mexico make up 14%, while other foreign countries make up only 3%. If we look at the product proposition and the main products offered by FASTENAL, fasteners make up most, 31% of total 2025 sales. Safety supplies come in second at 22%, while the remaining categories make up the rest. I have forecasted revenue to grow 9.5% in 2026, up to 12% by 2030. If we look at the FVMR investing system of FASTENAL, we can see that it's a mostly attractive company. It has some of the best fundamentals and ranks best in its peer group, with strong profitability and an extremely efficient use of capital. Valuation, however, in terms of it, FASTENAL appears a little bit expensive, trading at 6.1 times price to sales. However, momentum is moderately attractive, having ranked in the top 40%. On the other hand, FASTENAL has a very, very low risk profile and has a very strong risk profile, and a very attractive profile, with a low beta and a favorable 4.4 times current ratio. If we look at the world-class benchmarking system, profitable growth for FASTENAL has ranked number one across 1,410 industrial companies. FASTENAL has strong profitability, which is supported by excellent asset efficiency and expense control. Growth, however, has ranked in the middle of the peer group, and overall, FASTENAL combined exceptional profitability and efficient cost management. Looking at the profit and loss statement of FASTENAL and the actual and the forecast, I have forecasted revenue to increase from 8.9 billion in 2026 up to 13.5 billion in 2030. EBIT, I have forecasted to increase as well, whereas SG&A declines at a very steady rate. Gross profit has also experienced pressures primarily because of deeply embedded customer accounts, and there is a steady increase in net income. In the balance sheet, especially in the assets section, we can see the net fixed assets are increasing at a steady rate, particularly characterized by inventories, receivables, and other current assets. If we look at the liabilities and equity section, we can see that long-term debt of FASTENAL is forecasted to increase, and I believe this will happen is because FASTENAL will use long-term debt to finance its net fixed assets other than relying on short-term overdrafts. Looking at the cash flow statement, we can see that the net income is rising as well as debt, as I explained before. We can also see that there will be a The dividend paid is also rising for FASTENAL in the upcoming forecasted years. Looking at the ratios, we can see that FASTENAL has a more of a steady current ratio, whereas its inventory conversion period is reducing in the forecasted years. This supports my statement that assets are going to rise in the upcoming years. Gross profit margins remain decline slightly, whereas EBIT margin rises. This is because, as I said, customer embedment reduces the gross margins but increases revenue. We can also see that in this section, the liquidity ratios remain stable, showing that FASTENAL has a schedule and is going to be disciplining in a very disciplined way, finance its fixed assets. Net profit margin is also expected to increase to 17.9 in 2026. Looking at the free cash flow, we can see that EBIT has been forecasted to increase from 2.1 billion in 2026 up to 3.3 billion in 2030. This is primarily because I have forecasted a greater increase in revenue and a decrease in SG&A, showing that FASTENAL is able to leverage its SG&A properly, but experience little pressure on its gross margins, but ultimately increasing its EBIT margins in the upcoming forecasted years. CapEx is also expected to increase at a steady rate, which ultimately leads to the free cash flow to firm increasing as well from 2026, 1.5 billion to 2.2 billion in 2030. Now, if you talk about the relative valuation of FASTENAL, FASTENAL trades at a substantial premium to the USA, and it has a return on equity of 38.7% in 2026, which itself is well above the USA sector average. There is expected improvement in ROE, reflects stronger operating leverage, sales productivity, and scalable earnings. FASTENAL's price book to ROE ratio of 0.32 times is also above all benchmark markets. In this section, we can see that FASTENAL's 2026 EPS growth of 27.4% is materially above the US sector average of 17.9%. FASTENAL also has the lowest 2026 estimated PEG ratio among the benchmark markets at only 1.2 times. This shows that despite the premium headline and the perception, FASTENAL's expected earnings outlook is not completely reflected in the current share price, which ultimately supports my buy recommendation. If you look at this section and the ultimate valuation of FASTENAL, I have taken a risk-free rate of 2.5%. Along with that, I have assumed a beta of 0.8 times and a cost of equity of 7.4%. I forecast a capital structure with 14% debt to total capital, a pre-tax cost of debt of 3.7% with a 24% effective tax rate, resulting in an weighted average cost of capital of 6.8%. FASTENAL retains a 330% ROIC premium to the WACC by 2040, and I've applied a 10-year parabolic fade. A terminal growth of 3% has been assumed based on past FASTENAL performance and future outlook. And this results in a $52 share target price based on the free cash flow to firm method in DCF. As you can see, all three methods, dividend discount model, free cash flow to firm, and free cash flow to equity, all three have a target price above the current share price. If you look at the sensitivity analysis of FASTENAL is the main valuation drivers are discount rate and terminal growth. Even a slightest change in these two figures will result in a drastic change in the ultimate target price achieved. Finally, we're discussing the risk section. We can see that the major risk FASTENAL faces is execution of embedded supply chain growth. Other risks include industrial demand slowdown and customer spend volatility, tariff sourcing and inventory margin risk, competitive technology and cybersecurity risk. Overall, my core investment thesis is that deep customer embedment, investment in AI-powered sourcing, as well as plans and efforts to create a resilient supply chain will overall result in a buy recommendation for FASTENAL. Thank you.
Great. Okay, leave your presentation up there. But before we do that, let's just go through some of the questions from Christiana. She says, how confident are you that FASTENAL can keep growing faster than the broader industrial distribution market without sacrificing profitability? In fact, you're just the opposite, right? You're forecasting accelerating revenue and increasing margin. What's the risk to that?
So the risk that FASTENAL, as we can see in terms of fundamentals, had ranked at the top of this list. And I expect that this will only continue in the future. FASTENAL is already ahead of its competitors as it is investing heavily in AI and data centers, and we can also see that it's a deliberate shift towards deep customer embedment, which is a noticeable change in FASTENAL's strategy. This has been reflected in the past quarter, where we saw revenue grow amazingly, and this is the pattern that I believe will continue in the future, causing revenue to rise drastically as well as EBIT margins.
So let me just continue on with what she's also asked is, are you buying, when we buy FASTENAL now, are we buying future growth or paying too much for growth that the market already expects?
I have mentioned here that the future outlook and the scalability potential of FASTENAL is not reflected in the share price as of the moment. So that is what, when you're buying FASTENAL, that's what you are not just assuming, but also there's an accurate probability of this happening.
Can you go up to the consensus page?
Sure. Yeah.
It's interesting to note that there's no buys, right? There's 5 strong buys, like people have strong opinion there.
Yeah.
And it's also interesting to see, they've got 3 sells, there's 2 strong sells. So it really is, kind of opposite ends of the spectrum that people have opinions about.
Yeah.
But my question is, if we were to put your contribution up on this table, it would come under buy.
Yes.
And that would make you, in between those 5 and hold.
Yeah.
Why not come up with a strong buy? What's holding you back from that?
What's holding me back from that is because of the major risk that FASTENAL faces, which is, can it accurately execute its on-sites and its FMI tools? Can it accurately commit to its strategy? And that probability is unknown. We don't know about that. And that is what's holding me back from giving it a strong buy.
And let's look at another question, which is about investing abroad, right? Do you think that in the end, FASTENAL's never going to do, serious investment abroad? Or do you think that they're going to wake up and realize, oh my God, we could double our business, in the next few years by expanding abroad?
So we're seeing 2 things right now. We are seeing that US makes up most of its sales, and we are also seeing FASTENAL is shifting towards customer embedment. I believe FASTENAL will invest abroad. However, its more focus as of the moment is towards deeper customer embedment and more customer on-sites.
Good. I think that's good for now. We had some good questions and you did a good job. How does it feel to complete this assignment?
It feels amazing, and I'm very surprised at how was I able to do it. I'm very surprised.
Yeah, I mean, like for the audience, they don't really realize that you never even looked at this company before.
Yeah.
That was 6 weeks ago, and now you know how to produce a professional research report.
Yeah.
That's pretty amazing.
I'm very impressed by myself. I'm very, very happy that I was able to do something there.
Yeah, and it gets better because as you work on your 2nd, 3rd, and 4th report, you're just going to grow in confidence and grow in the skills of what it takes to do great research. And once you have those skills, nobody can take that away from you.
Yeah, I really hope I improve.
Yeah, you will. You will. All right, well done. And I'll see you in the Slack channel, and I'll let you go here, but very proud of your improvement, particularly from Friday. So way to go.
Thank you so much.
All right. See ya.
See you.
So that was a great breakdown on FASTENAL. There are some people out there that have never seen FASTENAL before, and that gives you a little bit of background on the company. His name is Hassan. He's in his 6th week in the latest Valuation Masterclass Bootcamp. And the next bootcamp starts in 68 days. That's September 7th, I believe. And you can get a pretty serious discount of $1,900. This lasts for 7 days only from now. So if you're interested, just click on that QR code or leave a message or comment below. My name is Andrew Stotts, and I hope that you build a competitive